Welcome to Charts from the Media. Today is January 5th, 2014. We're going to be taking a look at the iShares Broker Dealer ETF. The ticker is IAI. This is a very interesting ETF. IAI, it's where you don't want to be during a correction. It returned 65% in 2013, but it was down 27% in 2011 and down 60% in 2008. On the other hand, the S&P was up 2% in 2011 and down 36% in 2008. So this is where you don't want to be if the market starts heading south. This is even more appropriate to be taping this right now because the Nikkei is down 2% in overseas trading right now. We're going to take a look at a couple charts, two daily charts and a point figure chart. One of the daily charts will go back 2 years showing how and where the base formed, and then we will be looking at a little bit shorter time period of 4 months. Let's take a look at those. So here's the daily 2-year chart. As you can see, it had a base that formed over quite a few months, and then it had this strong rise up over the past year. And especially between October and January, it has really taken off. 32 to 38 in just a couple of months. We have a trend line here going back from November 2012. It's hit that a couple times. And if you look at this, this is the 50-day moving average. So right about that 36 level, you have a trend line, and then you have the 50-day moving average that could act as support for both of them. If you want to look for congestion areas, you'd have right around that 32, 33 area. Coming down here, looking at RSI, we do have a lower high on the RSI with that higher price. We have a lower high on MACD, and we have a lower high on slow stochastics. However, on the RSI and the slow stochastics, they're still heading upward. Let's take a little bit closer look at a shorter term chart. You're looking at a support line that has been tested quite a few times, and it has held. But a break could be significant, and we almost had a break right back here, right above that 38 mark, but it didn't quite go through it. Here it's made that higher top. It has had consolidation in a tight trading range, and watch for a possible breakout move in either direction. If it broke out from there, that could be bullish. However, it broke that trend line that's been tested so many times, that would really be a bearish sign. And here you're looking at the oscillators a little bit closer. The line here is accumulation distribution. As you can see, it had a very strong rise up, and it came down quite a bit, even though price action did not come down very much. And then it went back up, but not as high as it did the first time. So maybe we could be seeing a sign of a little bit of weakness here. When you put that in combination with the lower highs in RSI and then not as much volume up here at this level during the consolidation, that break, if it does break the trend line on the downside, it could possibly be rapid and significant. However, in an ETF with fund flows going so fast in and out of these, you would definitely want to have a stop above the 39 level. Here we have the point figure chart. It had a bullish price objective of 37.5. That was met, and now it's up here higher than it has been in the past. If you look at this move, this is all 2013. I would expect to see some retracement at some point. There you have it. It's an ETF to pay attention to, especially if we're going to have a correction in the market. You really wouldn't want to be long in that. Thanks for watching. Visit chartsfromthemedia.com for definitions, learning tools, videos, and more.